Hi everyone, welcome to another weekly Forex forecast. My name is Justin Bennett with Daily Price Action, and in today's video we're going to talk about the EURUSD, the Pound USD, as well as the Dollar Yen. We're also going to take a look at the Australian dollar and the New Zealand dollar versus the USD. I do think we have a few currency pairs on the verge of breaking out, so let's get to it right now. Quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started with today's video, be sure to hit that subscribe button below and also click the bell icon so you get notified every time I post these videos. So let's kick things off with the EURUSD. We've been talking about this one for quite some time, and the pair has followed through on the bullish potential that we've been talking about. So initially I mentioned this descending channel that did hint at a possible break higher, especially considering that the pair was coming off of this 109 area. So remember that this was a larger descending channel that dates back to 2018. So notice how this channel has offered support on several occasions. And sure enough, the EURUSD did bounce from that 109 area. Furthermore, we can see that the channel top is also well defined based on these two highs. So if we do see the EURUSD continue higher over the next few weeks, we could see sellers come out right around that channel top. And in last week's forecast, we looked at how the 110.70 level was serving as support. So notice how 110.70 served as support for the euro back here before the pair closed below it. It then started to attract sellers. So notice how once again the EURUSD bounced right from that 110.70 area. You can also see how at least so far the EURUSD has started to bottom here around 110.70. So notice how since this topping price action back here, the pair formed a series of lower lows and lower highs. So since the EURUSD broke out from this descending channel on this candle right here and also retested that 109 support level I mentioned, you can see how the euro is starting to carve these higher highs. So this was the last high right here, and notice how this recent high is higher than this one. So this could be the start of a correction higher. So notice how this price action back here did the same thing. We had this low, we then had a higher low, and we also had this higher high up here based on some of these recent swing highs. So just based on this recent price action, I am still looking for a move at least up into that 112 resistance area. So notice how 112 served as support through this area before the euro broke down, and it then began acting as resistance. Now, of course, we could also see a push all the way up into that channel top, and it is going to take a break above that, a close above that channel top in order to send the EURUSD even higher. So right now I'm looking at this price action right here as a corrective move following this recent descending channel. However, one thing to keep an eye on is what occurred last month in October on the EURUSD monthly time frame. So notice that if I move out to the monthly, we can see that the October range did engulf September's. So the low of October is actually a few pips lower. So this low right here is a few pips lower than this one. So the high is also much higher. And furthermore, the EURUSD did close October above the September high. So all of this points to the fact that we could see the EURUSD retest the top of this channel and perhaps even break out above this and rotate even higher over the coming weeks and months. So for the week ahead, I am looking for any rotation into this area between 110.70 and 111 to attract buyers, and at the same time, any push up into 112 will likely attract sellers. So it's going to take a close above that area to expose this larger descending channel top. Alternatively, if we do see the euro rotate lower and close below that 110.70 area, we could then see a retest of 110.20/30. Next, we have the British pound versus the US dollar, or GBPUSD. And just like the euro, this one spent last week consolidating. So last weekend, I mentioned this 127.80 area based on this low back here, as well as several highs once the pair broke below it. So notice how so far, since this 800 pip rally, the pair has held above that 127.70/80 area. Furthermore, we're seeing sellers come out and defend that 130 resistance area. Hence, we're getting this sideways consolidation. During times like this, I do like to stand aside because I don't like to get chopped up in this sideways price action. Instead, I would rather play a breakout of one of these two levels. So remember that it's going to take a daily close above that 130 area to send the pound higher. And it would also take a daily close below 127.70 or so in order to send the pair lower. Now, a close below 127.70 would expose that 125.70 area, while a close above that 130 region would expose the 131.60/70 area based on some of these highs back here. So unless you were able to buy the pound from lower levels and you're still holding today, I would be inclined to stand aside and wait for this consolidation to play out. Perhaps we get a wedge of some sort and then a breakout, or we just wait for a daily close above this 130 area for that move higher. But either way, I don't want to trade this one right now simply because of this sideways price action. Next up, we have the dollar yen, and this one is forming some really interesting price action. In fact, I favor this one over most others right now. And we had been bullish on the dollar yen for quite some time based on a potential inverse head and shoulders. So I have to say that because based on this inverse head and shoulders, it did look as though after this extended move lower that the dollar yen was ready to move higher. And it did for a while, but notice how it never did close above that 109 level. So I've been talking about 109 now for several weeks. And what I said was that it would take a daily close above 109 in order to send the pair higher and expose 110.60. But as you can see, we never got that. And Wednesday's session even formed this bearish rejection candle from the 109 area. So that did hint at a move lower, and we certainly got that on Thursday. And once that Wednesday candle formed, it did solidify this trend line that dates back to the June low. So notice how we have these two lows right here, as well as a couple of highs. We also have a trend line that extends from the year-to-date low that is currently serving as support. So when you put these two together, it looks as though we are getting a rising wedge pattern after this move lower. Now, as you may well know, a rising wedge like this does hint at exhaustion from buyers, and it can also trigger a move lower. Furthermore, and I wrote about this on Thursday, but on the weekly time frame, we are getting a bearish rejection candle. So I wrote about this on Thursday while there were still 24 hours left in the week, and Friday's session didn't rally enough to negate this pattern. So as of right now, this is a bearish engulfing week. And I also pointed out how these bearish engulfing weeks have played out in the past. So notice how we had this one back here, and we also had a bearish engulfing week right here. So notice how each one of these has occurred at a swing high. So we had this move higher, and we also had this move higher. We've recently had a bounce similar to these back here, and we've also now had another bearish engulfing week form. So if this latest weekly candle does play out like the rest, we could see the dollar yen start to rotate lower over the coming days and weeks. But as I wrote on Thursday, it is going to take a daily close below that wedge support somewhere around 108 in order to send the dollar yen lower. So notice how Thursday's session closed right at that 108 support, and NFP did cause a bit of a bounce. But as I mentioned to members in the forums, this so far does look like a weak bounce. So notice this Thursday sell-off compared to Friday's rally, and you can see that buyers are struggling to keep the dollar yen above this wedge support. So for the week ahead, I will be watching for a daily close below this wedge support around 108, and that would expose that 106.80 area that I mentioned a few weeks ago. So notice how we have this low, and then it started to serve as resistance. We then got that close back above it, and 106.80 started to attract buyers. And a daily close below 106.80 would expose this wedge inception point around that 105 handle. However, don't dismiss the potential for a bounce higher this week before we get that rotation lower. So the dollar yen may even want to come up and retest the 50% of that weekly candle, which could come in right around 108.50. So notice how we have these two highs back here, as well as several lows. And this level, I haven't even measured it out yet, but I'd be willing to bet that this area is pretty close to the 50% area. So notice how the 50% of last week's bearish engulfing candle is just above that 108.50. So we could see a rotation higher this week up into that 108.50, perhaps 108.60 area before we see sellers come in and push the pair lower, perhaps breaking wedge support. And if we do see the dollar yen push even higher, I would certainly expect to see sellers come out around that 109 resistance level. And of course, also the wedge top up here around 109.30, perhaps 109.40. So all in all, the dollar yen does look like it's ready to rotate lower, but we are going to need to see more confirmation from sellers in order to sell the pair. I talked about the Australian dollar versus the US dollar, or AUDUSD, on Friday, and I noted that a daily close above 69.20 was required in order for buyers to keep this recent rally alive. Now, we've actually had this descending channel on our radar for quite some time. So if you remember, we did trade a breakdown of this ascending channel way back here, and our target for this was this 67.50 area, which lined up with channel support. So we traded a break here with a target down here, but since then I haven't really been interested in the Australian dollar simply because we had this choppy sideways price action. However, we did see the Australian dollar break above that 68.80 resistance level last week. So notice how 68.80 served as resistance back on this swing high, as well as this one here. The pair then carved this higher low, and we're now getting that retest of this descending channel top up around 69.20. Now, I don't want to sell this one right now, and I don't want to buy it because we are holding above 68.80 support, and the pair is also still below that 69.20 resistance area. But if we do see the US dollar start to weaken, we could get that daily close above 69.20, which could re-expose that 70.30 resistance area. So on the daily time frame, it's a little bit difficult to see because we do have what appears to be false breaks around 70.30. However, if I move to the weekly time frame, you'll notice how well the pair has respected 70.30 over the last year. So notice how 70.30 served as support on all of these candles. It then broke down and began to attract sellers. Furthermore, 70.30 is also the 50% retracement of this descending channel. So notice how that 50% level lines up exactly with 70.30. So essentially right now, I'm just waiting for the Australian dollar to make a decision based on the daily time frame. And if we do see a close above 69.20, I'll start to entertain a long position on a retest of this area as new support for a push up into that 70.30 area. Alternatively, if we see the pair close back below 68.80, that would re-expose this 68 support area based on this high back here, as well as these recent lows. So right now, the Australian dollar is just one for the watch list, but I do think we could see an opportunity in the weeks ahead. The New Zealand dollar versus the US dollar, or NZDUSD, has a lot going for it. And I mentioned this pair a few times in recent weeks, including last Saturday's video where I talked about this 63.50 support area. So notice how we have this descending channel. And if we extend the upper line from this swing high back here, notice how the intersection was right at 63.50, which is also a key horizontal level. So essentially, we were looking for a reaction from that 63.50 confluence of support, which we did get last week. And we were also watching for how the pair reacted to this 64.30 resistance area. So notice how Friday's session did rally above it, but the NZDUSD failed to close the day above it. So remember what I've said in the past, that it'll take a daily close above this level or any level in order to confirm the breakout. So as of right now, based on Friday's candle, it does appear that we could see some weakness this week. The question is how much? As for me though, I'm not interested in selling the NZDUSD simply based on this daily chart that I posted last week. So if we draw a level across these highs, you can see how we have this potential inverse head and shoulders pattern. And this qualifies as one because we have a well-formed left shoulder ahead, and we also have now a right shoulder. Furthermore, the head is lower than both shoulders, and these two shoulders are also on the same horizontal plane. Furthermore, this pattern is occurring after an extended move lower. So all in all, this does qualify as a potential bullish reversal pattern. Notice too how the neckline of this pattern also lines up with that 64.30 area. So if I draw a 64.30 on here as a horizontal level, notice how the neckline intersects with this area. That creates a confluence of resistance, which is why we saw Friday's session sell off back below this area. So it's going to take a daily close above here to confirm this reversal pattern and also send the New Zealand dollar higher. Furthermore, the pair is coming off a confluence of support around 6,200. So I mentioned this a couple weeks ago based on the weekly and monthly time frame. So here on the monthly time frame, you can see that we have this long-term trend line that extends from the 2000 and 2001 lows. We then had this bounce in 2009, which enabled us to draw this trend line. And look at what's happened recently. We had this bounce in October right from that trend line. Furthermore, on the weekly time frame, you can really see how this falling wedge created this confluence of support around 6,200. So this is the trend line from the 2000 lows, and we then had this falling wedge that intersected right with that long-term trend line support. So based on all of this, I would not be surprised to see the New Zealand dollar trend higher over the next few weeks and perhaps even retest that wedge top. However, again, it's all going to come back to whether or not the pair can close above that 64.30 area, which would then expose 64.90, and a close above that would take on the 65.80 resistance area. Alternatively, if we do see a rotation lower this week and we start to close below some of these key support levels, that would indicate weakness in my opinion, and it may even negate the bullish outlook. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.